Hey everyone, I thought I'd make a quick video about the current situation on some of the forex pairs that I'm watching and also put it into perspective with the US dollar index situation that so many traders talk about right now. So this is the US dollar index, as you can see, with the long-term range that has been going on for quite some time. Yesterday we broke the lows, today we moved lower, but now we are seeing some bullishness entering the market and price got pushed back up. Although if we move closer, you can see that the candle size is not that meaningful to signal a full reversal yet. Compared to the other previous bearish candles, it's not a meaningful size, so we have to keep that in mind. And this newfound bullishness on the US dollar index, many people see it as a fake breakout, so this will be very interesting to see tomorrow and the following days. But keep in mind we're having a NFP week, so Friday will definitely be lots of volatility on the US dollar index. Let's go to the New Zealand dollar. US dollar, it's a very interesting setup right now, although it's not a classic reversal as we will see shortly. So I was looking at 0705. It's the previous highs here, and last week we moved into the highs and immediately rejected the highs very strongly. Price tried to come back up here, but it made a lower high and immediately broke the moving average again and is now trending lower, even broke the lows here. So this seems like a very classic reversal pattern, going from higher highs to lower highs and lower lows even. It's now seeing some support, but that's nothing to worry about too much right now. I think the trend line break is very obvious, although we are missing the RSI divergence. It's clear that the sentiment has shifted somewhat. We can draw the support line here. Very interesting. It has been acted as support resistance previously, so it's also close to 695, which is kind of a round number, so that will be interesting. Below that we only have this small demand zone, which should not be too much of a trouble to break if we make it down here. And the ultimate demand zone right here, 68 until 68.5 is probably where we are heading if we can stay in the bearishness. So this could set us up for a very nice long-term trade. The next one I really like is the US dollar Canadian setup. Let's go back to the daily first. We have been watching the 126-ish area for quite some time. It has been resistance before, and last week we moved back into the support as the resistance level as support. But since then price has just drifted lower. We were expecting a larger rejection, but price was in this massive downtrend, so the bears were still in control and markets paused a little bit to regroup. And now today we are seeing this candle right here. It has first it broke lower, but then immediately rejected the lows, and ever since it moved higher. If we close around the highs, then we have a bullish engulfing pattern engulfing the previous 3 days, so this will be a very meaningful signal. And also if we move to the lower 4-hour time frame, we can see this pattern very nicely. The support right here, in the morning price tried to break it to the downside, immediately got rejected and moved higher. You can also see that price broke the moving average here, whereas before it always got rejected. But also keep in mind, you can see price has been ranging previously, and during ranges the moving averages loses its validity a little bit, so we have to keep that in mind. It's not a strong signal, that's what I mean by that. But you can also see the long-term momentum divergence on the RSI. Although price was trending lower, you can clearly see Also, if you even look at just price, that the downside momentum lost strength, and the RSI just confirms that. So if we can stay above the moving average, close above the highs that we're seeing here, this would be a very nice signal. Also, together with the US dollar strength, if we can keep it up, then this would create a very nice long-term bullish scenario for the US dollar Canadian. The British pound US dollar is much more of a textbook reversal how I trade them. We moved into the highs here last week. We were expecting a reversal before that, but as you can see, although price rejected the resistance a few times, the moving average always held and price just keep grinding higher. I also mentioned last week that this was a very obvious level, and you can always expect that the more obvious a level is, the harder it is to profit from it. So I also said that we could expect a squeeze to the upside before we see new lows, and that's what is happening right now. You can see the RSI divergence is very obvious, very nice and clean. Then in the morning, 8 hours ago, we had this move to the upside similar to the US dollar Canadian, and then it immediately rejected the highs, and the next candle obviously very strong sell-off below the moving average. You can also see that previously the moving average held very nicely. Although we broke it twice, we were never able to stay below. So if this candle actually stays below, this would be a very meaningful signal. You can see now more bearishness is entering the market, so it's an interesting setup right now. To the downside, the first problem area I see is 145. We have seen some support previously, but I think the markets are now much more ready to move lower if we can stay in the bearishness and keep up the bullishness on the US dollar index. The next one is a setup that was not very easy to take. It was on the Australian US dollar, and although usually it's very highly correlated to the Kiwi, it's a very different setup, as we can see. So we had the actual reversal a few days ago already on the Kiwi, on the Aussie. We had been moving higher, then moved into the resistance. We didn't even make it there, and then price since then traded lower. You can see we are making lower highs and lower lows right now. I pointed out the 753 area last week. It's a previous support, and it's now even acting as support again, although it probably has weakened already. Price has been trading into the support zone very strongly, and so we can expect to see more bearishness. And always keep in mind, those setups are all setups if we can keep up the US dollar strength, so that's the premise for this analysis. To the downside, after the support area, 074 is the next one, and after that we have some room for lower moves. But obviously this one left the station already, and it's harder to profit from it right now. Although we could try to find re-entry opportunities during pullbacks, as the levels are very clean and price is respecting them very nicely. So potential idea would be wait for the break here of 753, then wait for the pullback and short on the retest. That would make a very nice trade with some downside potential. And finally, Euro US dollar, which so many people talk about. There's some kind of level, but I don't see it as that great compared to the other ones. People keep talking about obviously the 16 round number, and there's another one a little bit higher as the previous highs from this spike here. It's a 17, so both are round numbers, very interesting from a psychological perspective. And price is now rejecting the 16 area. You can see previously we sold off very strongly after moving into the highs, so there's definitely some supply we are picking up now again. Let's go to the 4 and look a bit more close. So this is not a classic reversal pattern that we are looking to trade. You can see the RSI just moved higher, and just recently we are moving lower on the price action side, but we're not seeing any type of divergence. So right now I would stay aside, because those reversals are usually like V types of reversals where you just move up strongly and then shoot down. It's not offering very clear and precise entry criteria, and it's more or less like catching a falling knife. So the ideal idea would be to wait for a new high, which would then make a double top, preferably with a failed breakout to the upside, would then trigger and squeeze some of the amateur traders, and that would be the ideal scenario here. But compared to the other ones, it's a low probability setup without much confirmation. There's this support level to the downside, which will probably act as support, 114.5, which also coincides with the moving average. So overall, the better setups are right now happening on the cable, on the US dollar Canadian, and on the Kiwi, and we can see the bearishness is maintaining. We can see the US dollar index is still trading close to the high of the day. So this will be a very important close today and set the tone for the few coming days until we have the NFP on Friday, which would definitely then be a major influencing factor for the US dollar related forex pairs. So I hope this makes sense, and if you enjoyed the video, leave a comment and let me know what you think about it. Have a good day, everybody, and safe trading.